Hello, ladies and gentlemen, it's Greg here. How are you today? Hope you are wonderful. So I'm here to give you an update on what we saw in March and what we are going to see over the course of April. So first things first, how was our occupancy? It was good. It was good. It was around the 90% mark. Now, true to what I have said before, we were expecting rates to drop. Why? Because tourists aren't flooding into Dubai. Given Ramadan being a religious holiday, some people have preferred to go to other locations. So naturally, rates would have to drop, and this is what the case was. But this supported us to keep occupancy up, to keep cash flow coming, and to make sure that there is money obviously coming to you at the end of the month. Eid, what did we see? Well, Eid is part of Ramadan. It is still part of this religious holiday. So a lot of people leave Dubai, especially the residents, they're all out. We do see a fair amount of people from Saudi coming in, which is what we saw. But in general, Eid is of course a quieter time frame for us anyway. However, as we step into April, we are already seeing April pick back up post-Ramadan. Of course, it's high season, lots of people traveling to Dubai. So we're welcoming families from the West, and they're of course flying in for the Easter break or the half-term breaks. Typically, the Easter holidays start from Monday, the 7th of April through to Friday, the 18th. So this follows as a very, very, very welcomed period after Ramadan, where we're going to see your rates double, triple, even in some cases quadruple, which is brilliant, which is what we want. So let's move into the market. What are we seeing? What changes have we had over the month of March? So listings available in Dubai to short-term rent, as mentioned in last month's video. In February, there were 25,600 active listings. In March, this number's actually decreased, but only slightly, to 25,400, showing a minor month-on-month decline. This decline is expected to continue, which is viewed as a positive trend for us. Less listings equals less competition, which of course equals higher ADR. This pattern is observed every year. This is something that we notice. So from August to January, we see the stock levels rise, and from January to July, we actually see the stock levels drop month on month. What can we take from this? I think it's fair to say that some owners are considering still the long-term option. And of course, as we know, the Dubai main markets are over the winter months. And then of course, over summer, there are a fair few homeowners that are looking for other options like short-term, and then perhaps reconsider these over the winter times. But it's a pattern we've seen now year on year on year. So let's wait and see what we see going forward. On to bookings. What are we seeing? Are we seeing high value bookings? Well, yes, we are. We continue to see increased mid-term bookings. Just as an example, we had a property in Barsha Heights. It's a studio. Someone booked it for 51 nights and they paid 40,706 dirhams. That's a fantastic rate for a property in that location, that's for sure. And also with high value bookings, we have a 3-bedroom apartment on the Palm. The guest booked with us for 12 nights and they paid 16,356 dirhams and of course 75 fils. So what's this telling us? It's telling us that the market is still very buoyant. There is still lots of guests out there willing to pay some fantastic sums of money for the right properties. Yes, stock is going up. Yes, there is more competition, but if you get the furnishing right, there's always going to be someone there willing to book and of course pay large sums of money. This is also, I should say, another reason for this is of course the increased amount of people that have travelled to Dubai in general, which we saw approximately 500,000 to 1 million more tourists come to Dubai over the last 12 months. Right, bit of real estate news for you. So launches, we are still witnessing one new development launch per day in Dubai. I mean, that's huge, isn't it? Which is already leading to oversupply in certain areas. This oversupply can impact property owners by reducing the value of the long-term rentals and sales prices. Now, according to Property Monitor, over 250,000 properties are set to be handed over between now and the end of 27. 250,000 properties in less than 35 months. That is substantial. So with 55,000 units handing over in 2025 and over 100,000 units in 2026. So it is crucial to stay agile, flexible, and of course in control over your property during this period. Now, Property Monitor do claim that there's 55,000 units handing over in 2025. However, there are very varied sources saying this is going to be 72,000 plus, and I've seen that sum come up more than, I must say, the 55,000. So be prepared. But either way, there's a lot of property handing over. And what will that do? That will naturally put pressure onto prices. We already saw drops in January. We will see more. This isn't if, this is when. And of course, we will see rents drop. We're already seeing certain areas like JVC, landlords are now accepting 12 checks. We've had several cases recently where we've seen one bedrooms being marketed at around 70, 75,000 and owners now accepting 55,000. So that's a big drop. But this is the start. So not by any means do I think that we're in a crash or anything like that, but this is the start. Just like the figures I explained in the previous video that we did. You've seen 30% less rental renewals in the month of January, H2 2024 versus H1 2024. You've seen less rental transactions. And of course, as I've already said, prices actually dropped by 0.57% in January. So there is a change afoot. It is happening. So the aim here is to keep control of your property. And of course, the short let model offers you this. So it's really going to show its true value, because of course, if prices continue to drop, I'm sure there's many of you that would want to sell and of course cash in on those fantastic profits that you've made over the past 2, 3, 4 years. Some other news in the market. This is an interesting one. Tokenization of property. So last month, I mentioned how developers are now offering better payment plans because they can't sell their stock. But developers have introduced incentives such as lower down payments, extended payment plans, and discounts. Now, from a government level, we see that the Dubai Land Department begins real estate tokenization project to help the incentive, or to incentivize, I should say, smaller investors to participate in the market without needing to purchase an entire unit. So this means properties can be divided into digital tokens. So you can effectively buy an amount, small or large, shares of a property, meaning you'll buy a share of the return. So this initiative aims to make property investment more accessible, transparent, and efficient. By 2033, tokenized real estate could make up 7% of Dubai's property transactions, worth around 60 billion. So what do I take from this? It already exists. There are several companies out there like Stake that are already offering such things. I think this is the government actually wanting to have more of a grasp of it and actually back this type of real estate investment. It's brilliant because it allows people that can't quite afford the deposits or to purchase a property outright to still get on the property ladder with a share, minority share or larger share, whatever that may be. So just an interesting incentive, and also very interesting to see that the government are looking at that type of buyer and enhancing them. Because as we've seen now, roughly 60-70% of purchases are now mortgages. It looks like the people purchasing with cash is now backed off, but that has been the case for the last 6-7 months. Again, that's another sign. Investors with cash are slowing down. You know, there's all these signs that we can piece together. But this tokenization, I think, is a good thing. It will open up different channels of buyers to come into this market. So there we go. That is a roundup for March and what we've seen. Again, as always, thank you so much for your journey, your continued journey, I should say, with us here at AirDXB. And we hope you have a wonderful day. Take care.